What if I told you that right now, while most Americans are distracted by headlines and culture wars, a quiet financial shift is taking place that could permanently change how wealth, taxes, and opportunity work in this country? Not next decade, not someday, right now, and almost nobody is explaining it clearly. Before we pull back the curtain on this massive transition, hit subscribe to Tax Hack Pro. We follow the money, not the hype. If you want to understand how new tax laws, government programs, and financial policies actually affect your wallet, you need to be part of this community. In the coming months, Americans will start noticing changes that feel confusing at first. Bigger refunds, new tax rules, new government-backed investment accounts for children. Most people will only realize what happened after the money moves, and by then, it may be too late to take full advantage. The Trump accounts era. A structural shift in ownership for the first time in decades. The federal government is openly reshaping how Americans interact with wealth, investing, and taxation, starting from birth. Under the Working Families Tax Cuts Act, a new government-backed investment structure has been introduced called Trump accounts. For children born between January 1, 2025 and December 31, 2028, the U.S. Treasury will choose to make a one-time $1,000 seed contribution into a tax-deferred savings account. This isn't a handout. This is a deliberate attempt to turn passive citizens into market participants. The account features a $5,000 annual contribution limit from parents, grandparents, and even family friends. The funds are mandated by law to be invested in broad market index funds with low fees, ensuring that the next generation grows up watching ownership instead of just wages. Think about the psychological impact. A child growing up checking an account balance, seeing markets move, and understanding compounding returns before they even graduate high school. This is a structural shift designed to merge Main Street with Wall Street. The 2026 tax overhaul. While your paycheck is changing at the same time, the One Big Beautiful Bill Act, OBBBA, is implementing sweeping tax changes that directly affect your cash flow right now. Many of these changes are retroactive to the beginning of the year, meaning you might be owed more than you think. For working Americans, two massive deductions are changing the math. 1. No tax on tips. Individuals in traditionally tipped occupations can now deduct up to $25,000 of qualified tips from their federal taxable income, $50,000 for joint filers. 2. No tax on overtime. If you work hourly, you can now deduct up to $12,500, $25,000 for joint filers of the premium portion of your overtime pay, the half in time and a half. These are above-the-line deductions, meaning they lower your adjusted gross income, AGI, whether you itemize or take the standard deduction. But here's the Tax Hack Pro warning. Most employers are still withholding taxes based on the old rules. This means the federal government is currently holding onto your money in the form of an interest-free loan. If you don't update your Form W-4 to account for these new 2026 deductions, you're delaying access to money that is already yours. The domestic drive deduction, if you're planning on buying a car, the rules just changed there too. A new auto loan interest deduction allows you to deduct up to $10,000 in interest paid on a loan for a new vehicle purchased after December 31, 2024. The catch: the vehicle must have its final assembly in the United States. To claim it, you'll need to provide the VIN to the IRS to prove the car was built domestically. This is a targeted effort to boost American manufacturing, but for the average taxpayer, it could mean a significantly lower tax bill. The 2026 Silver Tsunami and the senior bonus retirees aren't being left behind in this transition. The new laws include a senior bonus deduction, specifically for those 65 and older. This is a stackable deduction that goes on top of the standard deduction, designed to provide relief for seniors living on fixed incomes in an inflationary environment. Combined with the permanent extension of the Tax Cuts and Jobs Act, TCJA, individual rates, the government is essentially trying to stabilize the silver tsunami, the 10,000 boomers retiring every single day, by letting them keep more of their Social Security and pension income. If you're finding this breakdown useful, subscribe to Tax Hack Pro now. We break down the fine print that others gloss over, the AI reallocation, the future of your job while the government is shifting the tax code, artificial intelligence is shifting the labor market. We've already seen tens of thousands of roles in data processing and administration disrupted. The official narrative is reallocation, that AI won't replace you, it will just move you to a different department. But the reality is more complex. AI is increasing productivity, but those gains only translate into job security for workers who can adapt to the new tools. The system is being rebalanced. Government-backed accounts for kids, massive tax refunds for workers, and AI reshaping labor. This isn't random. It's a coordinated transition period. The sudden shift financial systems don't change loudly. They change quietly and then suddenly. Families who understand these shifts early will position themselves better. Parents who open these Trump accounts on July 4, 2026 will give their kids a decades-long head start. Workers who update their withholding today will see an immediate raise in their take-home pay. Every major financial transition in history created two groups, those who understood it early and those who paid for it later. The difference was never intelligence, it was awareness. If you want to stay aware, stay informed, and stay protected, subscribe to Tax Hack Pro. We'll continue breaking down what matters, without hype, without politics, and without distractions. Your money deserves clarity. Thanks for listening. Stay sharp, stay curious, and I'll see you in the next Tax Hack Pro investigation.